Welcome back. Less than half of expats who move to the UAE to earn more money and a tax-free salary expect to fulfill their financial goals by the time they leave, according to a new survey. A survey of 1,000 expats conducted by YouGov on behalf of Zurich International Life revealed that only 44% of expats managed to achieve their financial targets during their time in the UAE. The poll also showed that the majority of those lucky enough to receive a company bonus will use this extra cash to settle debt or pay bills. According to a survey, 71% of UAE residents will receive a company bonus during 2015. However, for 39% of bonus recipients, the primary use of their payment will be to settle debt, with a further 16% using the bonus to pay bills such as rent or school fees. Another 13% of respondents said that they will leave their bonus in the bank. 11% will invest in property, 10% will invest in a savings scheme, while only 7% will spend the majority of their bonus. The survey of UAE residents also found that Arab expats are the most likely to use their bonus to settle debt or pay bills, with Western expats the least likely to settle debt or pay bills. Zurich's survey also asked expats respondents for the main reason they moved to the UAE. It found 44% of expats relocated to earn more money and a tax-free salary. 20% came for career progression, and another 20% for family reasons, in most cases to stay with their spouse. Only 11% relocated to the UAE for its lifestyle and safe environment. Dubai inflation edged down in March as a strong dollar and low global food prices cut families' supermarket bills. Overall prices rose at an annual rate of just above 4% in March, somewhat slower than February's annual rate of just above 4.3%. Food and drink costs are down 1.9% compared to March 2014. This represents a decline on 1.3 percentage point over the previous month's annualized rate, with month-to-month food prices almost flat. Expectations of rising interest rates in the U.S. have pushed up the strength of the dollar, increasing the purchasing power of the dollar-pegged dirham. This has lowered import costs, making foreign food cheaper. The United Nations Food and Agriculture Organization said that global food prices are at the lowest they have been for 5 years. Cereals, meat, and sugar are all significantly cheaper than 1 year previously, as a global supply glut pushes down prices. While food may be cheaper, housing costs continue to rise, with real estate and utilities prices above 7.5% higher than 1 year previously. The pace of housing cost rises in Dubai over the past 6 months has remained steady at around 7%. The real estate consultancy JLL expects house prices in Dubai to decline this year and estimates that rents could fall by as much as 10% by the end of December. Emirates Airlines on Friday announced a $9.2 billion deal with Rolls-Royce for Trent 900 engines and a long-term total care package. The engines will be used to power 50 Airbus A380s ordered at the Dubai Air Show in 2013, which will begin entering service in 2016. The deal, which is the largest ever for Rolls-Royce and one of the largest ever export orders for a UK-based company, is part of Emirates' ongoing investment into the UK and Europe, with a partnership marking a significant milestone for aviation manufacturing in the region. Emirates' investment in the Airbus A380 program has had a significant impact on the UK and wider European economies. A recent Frontier Economics report identified that in 2013-14, Emirates' investment in the A380 created 7,000 UK jobs, equating to a $630 million GDP contribution. Across the EU, Emirates' 140 A380 orders are estimated to have supported 41,000 jobs, the equivalent to a massive $3.6 billion. The A380 program sits at the heart of Emirates' growth strategy, with 60 super jumbos currently in operation and a further 80 on order, making Emirates the largest buyer of the aircraft. Since its introduction in 2008, over 36 million of airline's passengers have flown on the aircraft. The number of millionaires living in the UAE is forecast to grow by 15% to reach approximately 82,600 by 2017, according to a new report. Growth will be constrained by the falling oil price, which is expected to deter business formation and construction, according to the findings of the recent UAE 2014 Wealth Report by New World Wealth. The report stated millionaires living in the UAE have reduced the amount of their wealth that they hold overseas in the past 7 years. At the end of last year, high net worth individuals held 41% of their fortune abroad, held their fortune abroad compared to 47% in 2007. The report also showed that Europe made up the largest share of foreign holdings at 57%, followed by Asia-Pacific 16%, the rest of the Middle East 15%, North America 7%. Cash and bonds was the largest asset class for high net worth individuals in the UAE, representing 32%, followed by business interests at 23%, real estate 22%, equities 17%, and alternatives at 6%. Real estate recorded the strongest growth over the review period, followed by business interests, with a trend away from cash. At the end of 2014, there were approximately 72,100 high net worth individuals with net assets of $1 million or more living in the UAE, with a combined wealth of $305 billion.